Welcome to the weekly CotMasterFX institutional market briefing for the week ending July 18, 2026. At CotMasterFX, we've developed a hybrid institutional framework that combines information from both the legacy Commitment of Traders report and the newer Traders in Financial Futures report. We transform complex institutional positioning into clear, structured institutional market analysis designed for retail Forex traders. Because understanding where institutions are positioned is the first step towards understanding where institutional money is likely to flow. Every week, Market Radar automatically imports both the legacy and Traders in Financial Futures Commitment of Traders reports from the Commodity Futures Trading Commission. It then applies its unique proprietary logic to decode the report's data and apply it to pairs, effectively uncovering institutional footprints and commitment. Every market is evaluated using 5 institutional factors: institutional imbalance, long-term positioning, developing trends across the long, medium, and short-term institutional time horizons, weekly institutional participation, and institutional sector agreement. Markets demonstrating the strongest imbalance and institutional conviction are highlighted for deeper analysis, while weaker or conflicting markets are filtered out. Our objective is simple: to help retail traders understand where institutional conviction is strongest. This will allow them to focus their attention on the markets displaying the strongest institutional participation and therefore offer the highest quality trading opportunities. The objective isn't simply to find more trades, which by itself simply increases risk. It's to identify higher quality retail trading opportunities where we have uncovered the directional intent of the institutions. Uncovering what not to trade is just as valuable as finding out what is best. The complete market review is divided into 4 regions covering all 28 primary Forex currency pairs. Each region is scanned individually and displayed in the table on your TradingView desktop. The following commentary provides a high-level summary of this week's institutional positioning. Each region is covered individually, then we will further examine one pair displaying a trade opportunity and one with highlighted risk. Region 1 presents one of the clearest examples of institutional neutrality this week. Across all 7 markets, institutional positioning remains broadly balanced, with no meaningful imbalance developing between the major market participants. Long-term positioning shows little evidence of institutional conviction, while weekly participation remains subdued across the region. Importantly, there is no consistent agreement between the institutional groups that would normally support a directional market bias. Rather than forcing trade ideas where no institutional edge is displayed, Market Radar filters these markets out and encourages patience. When institutional positioning lacks conviction, preserving capital is often the most professional trading decision. Region 2 is where the first signs of opportunity begin to appear. This region displays the first indications of improving institutional activity. While the majority of markets remain balanced, several currency pairs are beginning to demonstrate developing institutional participation and directional interest. At this stage, however, much of that activity remains incomplete, with several markets still lacking full participant agreement or sufficient institutional imbalance. These markets deserve continued observation rather than immediate execution. Market Radar classifies these opportunities as developing, recognizing that institutional positioning often builds progressively over several reporting periods before producing higher conviction trading opportunities. Region 3 currently represents the strongest area of this week's institutional analysis. Several markets are displaying improving trend development together with increasing institutional participation, suggesting that conviction is gradually strengthening. Despite this improvement, a number of markets continue to show conflicting institutional positioning, preventing them from progressing to higher confidence classifications. This illustrates an important principle of institutional analysis. Developing momentum alone is not sufficient. Strong institutional agreement remains essential before higher quality opportunities are considered. Our final region returns to a predominantly balanced institutional picture. Across these markets, directional imbalance remains limited and institutional participation offers little evidence that a sustained move is currently developing. While isolated positioning changes are visible, they lack the broader institutional agreement required to support higher confidence opportunities. Rather than interpreting every market movement as a trading opportunity, Market Radar identifies when institutional conviction is absent. This disciplined approach helps traders remain selective, focusing only on markets where professional participation provides a measurable advantage. This week's institutional review highlights an important reality of professional trading. The objective is not to find opportunities in every market. It is to identify the few markets where institutional positioning provides the greatest statistical advantage. Let's now examine this week's featured institutional opportunity in greater detail. Market Radar identified the pound CAD as this week's featured institutional opportunity. Although this market currently carries a 4-star rating rather than the maximum 5 stars, it demonstrates many of the institutional characteristics we must see before committing additional attention. The first requirement is institutional imbalance. Without imbalance, markets rarely develop sustained directional movement. In this case, institutional positioning shows sufficient imbalance to justify further investigation. We now move into Next Gen, where institutional conviction can be examined in greater detail. 3 of the 4 institutional sectors are positioned long, including non-commercials and commercials and dealers. Asset managers remain the only sector not yet fully aligned, although their weekly participation has improved and is beginning to move in the same direction. Looking at the institutional flow analysis, we can see why this market remains a 4-star opportunity rather than receiving the highest possible rating. Long-term positioning shows 3 of the 4 institutional sectors already committed to the long side. Importantly, weekly participation continues to support that positioning, with the 4 sectors now showing positive weekly development. Institutional agreement has strengthened from 3 sectors in the long-term view to a full agreement across both the developing trend and current weekly participation. This is an important institutional observation. Market Radar doesn't simply identify where institutions are positioned today. It also measures whether institutional conviction is strengthening over time. That progressive improvement in participant agreement is one of the reasons pound CAD advanced through the filtering process. The price chart shows the market consolidating following a strong advance. Institutional positioning continues to support the broader long bias, although recent price action suggests the market may still require further confirmation before attempting another sustained move. As always, institutional positioning identifies where opportunity may exist. Market direction alone is not enough. Sustainable institutional moves require both directional commitment and meaningful positioning imbalance. Next Gen separates these 2 components, allowing traders to distinguish between markets with genuine institutional conviction and those where apparent momentum may simply reflect short-term positioning noise. Now moving to our featured high-risk pair for this week, we can see why institutional analysis must always consider the complete picture. Looking first at the Next Gen flow analysis, the conclusion appears straightforward. All of the institutional sectors continue distributing positions in a coordinated manner across multiple time horizons. On flow analysis alone, many traders would naturally conclude that this market presents a compelling short opportunity. However, professional institutional analysis never relies on a single source of information. When we compare that flow analysis with the Next Gen bias table, a very different picture emerges. Despite consistent institutional selling, there is very little positioning imbalance developing beneath the surface. Mid-term positioning remains broadly flat, while current institutional imbalance is insufficient to support a higher conviction directional move. This creates a potentially dangerous divergence. Price appears to be strengthening, while institutional participation continues weakening. These conflicting signals can create an environment where retail traders are tempted into positions that lack meaningful institutional support. Market Radar recognized this conflict immediately. Rather than highlighting the market as an opportunity, it correctly filtered the pair out. This illustrates one of the most valuable lessons in institutional trading. Sometimes the highest quality trading decision is recognizing that there is no trade at all. Professional trading isn't about finding opportunities in every market. It's about having the discipline to participate only when institutional evidence aligns. Thank you for joining us for this week's CotMasterFX Institutional Market Briefing. We look forward to welcoming you again next week as we continue decoding institutional positioning across the global Forex markets. Until next week, thank you for watching and trade well.